This is what I think a lot of people think a trend day is, and what is actually far nicer to trade. P-shape, B-shape liquidation days. A P-shape goes up and creates a P, a B-shape goes down and creates a B. I know that you get people calling it a short covering day and a long liquidation day. To me, people are liquidating positions, so it's a liquidation day. P's go up, B's go down. The idea of this is that people are positioned, market tips beyond a point where they all get out together. This is your medium time frame type people. They all get pushed out together and it rushes towards the downside or it rushes towards the upside. Nice and quick. Typically, they're quite counter-directional. So you'd have a situation where the market, say, trades down, does this, and then the liquidation does that. The other part of it is they're going to be quick. So you have to plan for the possibility of a liquidation day. So you are looking at, right, well, I think it's quite fair to assume we could liquidate from here. That's the point where you need to be aggressive. You need to be quick to get in, but the advantage is it will show you you're right fast. It will put you on side and it will go and go and go. After that though, you will get the sort of base of the B or the base of the P. When that happens, you're just going to trade it up and down in a range. For those, my personal preference is to go and look for the single prints, wherever they are, play from the single prints back to mid-range, and that would be it. Back up, back down, up, down, and play that for the rest of the day. It's pretty 50-50 on a liquidation day what it's going to do afterwards though. They don't have to keep on going. If they are going to keep going, more likely you actually get a balance and then a continuation. They can liquidate straight the way back up because you get people who get short down here waiting for a next leg and they then get pushed out against a market that doesn't have any sellers in. As I said before, if these are people who are long and selling to get out, they're not going to defend that on the way back because they didn't really want to sell this. So they're not now going to sell it on the way back. Example here, this is one where you can start to think, okay, we could get a liquidation. Reason being, you've had a day that trades down, close high, close high, close high. So whilst it tries to go down, and even if it shifts value lower, it's a market that's not able to actually sustain that movement. So there's lots of sort of rejection. The people who are going to liquidate positions are also not going to get spooked out by this. This is just trading in a range. So this is a chance to sell more, right? Well, it will sell more until you get the break. Once it breaks, they're all going to give this up. And so that's what then creates this fast directional movement. Once that is done, you're then just going to get this type of action. Balancing type market where we trade up and then just rotations. So what I'm looking for there is single prints which are established here, previous high, use that as your area, passive entry, back to the middle of the range. And when I say middle of the range, middle of this area. So at that point in time, you'd be looking at that high, this low, and go, well, somewhere in the middle there. And that would be your exit. So it's all about getting that early recognition and going for it early. If you're a bit too slow on it, then you end up, it's up here and you've missed it, then you're just playing the rotation. But crucially, it's about recognizing where you think that liquidation could come from. Another example here, this is one where you get a B shape, a P shape, and a B shape again. Mostly because it's a market that gets itself carried away one way, then another way, then another. What you've had here is what I would call a one time framing move. So shift, 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 shift. Market trades down and then it basically rejects that move lower. Gaps up, but when it doesn't get the move higher, it then liquidates lower back through this range. This is almost the genuine move that you would have expected here. So that's the liquidation. Fine. What you then get is an assumption of balance, maybe further move lower. But instead, because you've got people who have built shorts in here, they then get liquidated back. So now anyone who builds a long has the risk of getting liquidated back the other way. So it's not something you see super frequently. You could almost argue S&P did it Wednesday, Thursday, Friday last week, where it got people to go one way, sent them back, got people to go the other way, sent them back. And that sort of went on throughout the previous week. Just to give you a little sense of how it actually sort of played out. With these, what you get, a little bit of a sell-off. I'm always looking for a point where you then get this accelerated move towards the downside. Once that's happened, then you get the balance. This is actually quite a sort of aggressive balancing type one there. Then you get the overnight sell-off. So this is partly why you get the liquidation. The overnight sell-off, anyone who was short in here thinks, yes, this is good, doesn't work, and they then have to run for the exit, because on the open, it just goes straight up. So as soon as the buying comes in on the open, you don't know that the buying's going to come in, but if you see that bit of pace of buying at the open, you can assume it's going to liquidate back the other way. Then you get this long period of consolidation. This is people going, okay, well, we went down and failed, now we go up, and they also get caught. Comes out of that. Again, it's about the speed of the move. It comes out with some volume. Yeah, this is far, far higher volume than you would typically get at that period of the day. So when it comes out with that far higher volume, that's the one that you can go for. Okay, well, it's now a liquidation of these lot as well. So always sort of trying to think about this, where I emphasize, trying to think about how people have got themselves positioned.